Okay, guys. All right. I think we'll just start just now, and would like to firstly welcome and thank you guys for attending today's live webinar that happens every Monday at 4 p.m. my time, and today is the 30th of May 2016. So today we are looking at a couple of very interesting things in the markets. We're expecting some events going on now. Just to let you guys know, we are really close to the June's Brexit as well on the 23rd of June. Okay, but sharing with you on some of the events, I would like to second. Right, on events, there is a couple of things. Before we go on to the currency center of Yahoo, I'd just like to look at brief areas, I mean, in terms of which pairs are moving the market and so on. There is something here that's quite interesting. Let me just share with you. Let me see whether I can remember where I've actually put it. There are a couple of events that will take place in the month of June. Okay, we've got a couple of things. Now, some of the things like here, for example, on Reuters.com on Tuesday, 31st of May, there is something that is, there are things, there are events that are actually not on the economic calendar. Okay, like for example, if I go onto the economic calendar here and I filter it for the whole of this week. Now, the whole of this week would be from Tuesday, 31st of May, sorry, from Monday onwards, but Monday we didn't have really high impact or events that are classified as high impact. So we're looking at Tuesdays onwards. Okay, so Tuesday onwards, you're looking at here, we've got things revolving the euro right down. Now, the most important thing for you guys to understand as well is you need to be very aware and don't actually think whatever that you see onto the economic calendar are all there is to it. I mean, there are a lot of other things that are happening or will happen for the whole week, but then you are not actually, you're not able to see them onto your economic calendar. For example, now we have on the 2nd of June, see the 2nd of June, once I've actually filtered it to the most important or high impact event, you don't see the OPEC meeting taking place. Now, the OPEC meeting that has got to do with oil is going to shake the market quite a lot because you've got a lot of, you've got quite a number of countries who are the main oil producers will be meeting June the 2nd in, I think it is in Vienna. Okay, in Austria. So they're meeting up to actually decide and make some decisions regarding oil supply and oil demand and things like that, whether to produce, to cut production. So that has got a lot to do. So that's news revolving black gold. Okay, oil. All right, so that you don't actually see it here, and that is happening on the 2nd of June. Now, if I go on to, let's say, if I go on to here, give me a second. This one here, for example, then on Reuters, if you go onto Google and you type on economic events, just on Google, you type in economic events and you could click onto the news tab, you'll find other news that are revolving economic events. Now here, for example, we have got something quite important, but they're not mentioned on the economic calendar. For example, Tuesday, May the 31st, we have got the Bank of Italy that will release the annual report. Okay, so the market might actually react to the annual report that has been produced by Italy, because Italy is one of the countries within the EU zone or European Union zone that actually produces quite a number of things, and they're quite high up there in terms of earning their country's share through manufacturing and export and things like that. So this one here has got a lot to do with it. Okay, that's May 31st of June. That is tomorrow. So if you're actually wondering, for example, why suddenly at certain time of the day you have got the euro bouncing up or something like that, you need to understand that not all that you see on the economic calendar would actually move the market. There are underlying factors, but not only that, there are events that are not broadcasted largely or not actually advertised onto the economic calendar. All right, so you need to be aware of that. Now here we have got June the 1st. Federal Reserve issues the Beige Book of economic condition. Now, if I go back to the economic calendar here, I don't see anything here. Okay, I see unemployment rate or non-farm payroll. I see the ISM manufacturing that is on Wednesday, June 1st. Okay, I see the ISM prices paid and all the other things. Okay, now I don't actually see this part here, June 1st, beige book. Okay, the European Business Summit on the theme. All these things you can actually read here, but I'm just wanting to inform you about June 1st. We may have quite a eventful week, meaning that there are quite a number of things that are going to move the market on a large scale, because there's a lot of underlying events that are not advertised as well, and they are, you know, significantly big events that will move the market. All right, so now let's look into something of my favorite that just gives me a bird's eye view. Let's look into this currency center on Yahoo, okay, because we want to look at what may be moving the markets for the week. All right, so we have got, for example, I like to click at yen crosses first, okay, sometimes just to give you a bit of an idea. Now here itself is giving you an idea. Once you click on yen crosses, everything versus almost everything, or you can say everything that don't know why this is not. Give me a second, let me refresh that again, guys. Okay, give me a second. Okay, now I'll click on yen crosses again. Okay, this gives us an idea. Everything against the yen is positive. Okay, everything against the yen are positive, so that gives you an idea that the yen is on the downside, and everything else against the yen, for example, euro versus JPY and everything else, they're all positive against the yen. So that is giving us an idea that the yen is quite weak. Okay, it's the weakest among all pairs, all currencies that you can see. It's the weakest at the moment because everything against it are actually stronger. Okay, so this gives an idea that yen is really on the downside. Then we look at major movers at the moment, major pairs and major movers. Here itself, you could actually look at highest at the moment. So as for now, for example, you've got the euro versus the yen. So you've got a lot of movement for the euro on the upside against the yen. Okay, so the yen. So this gives us an idea that the yen may be moving a lot as well, but on the downside. Now, the thing to also be aware is today we have got a bank holidays in both the US and the UK. Okay, so we've got a spring break starting in the UK, and we have got the Memorial Day in the US as well. So that should have actually slowed down the market, and it did to some extent, but we do have quite a number of movement for the other pairs. Okay, we'll discuss gold as well. We'll discuss oil a little bit. We'll also discuss a little bit on crosses as well. Okay, so here just to give you an idea, we've got quite a number of movement here from the euro and from the dollar. Okay, if I were to pick up a few very strongly moved currencies for today, we have got the Euro JPY and the USD JPY, and they are both actually against the yen. Okay, so that gives us an idea. Yen is really falling at the moment. There's a lot of depreciation, as you guys know. There's a lot of news revolving yen as well. As you can see down here, we've got yen falls as stocks rise, Canadian dollar tracks crude oil lower, and all that kind of news. You can always type in oil and click on the news tab on Google and look for all news that are connected to the oil prices and things like that. Okay, now we have got European crosses as well. Let's just briefly look before we go onto the chart. Okay, so we have got all the euro ones here, right up from the first to the fourth row. Here you could actually look at most of what concerns the euro. We have got the highest movement so far between euro CAD and euro AUD. Okay, and they are all on the positive side. So you got a lot of appreciation of euro against the AUD and CAD. Now AUD and CAD, they are both commodity currencies. Okay, so as then you can make a bit of a conclusion that most commodity currencies are a bit on the weak side. Why? Because euro against AUD positive, so that means euro is stronger and AUD is low, and AUD, CAD, NZD, they are all commodity currencies. So if all these commodity currencies are on the downside, usually gold and silver, they are on the downside as well. So we will double check that later on. So here you have got a lot of commodity currencies, everything that are related to what do you call that, commodities like gold, silver, palladium and all that, they're all on the downside. Okay, so if this is all, if all the safer assets are on the downside, for example, if you've got what you call that, people are not really putting in their money into commodity currencies or commodities, that means they have got more confidence on the dollar. So this is what's going on now. The dollar is actually on the upside. So if dollar is on the upside, that means this is a risk on market. Risk on market doesn't actually mean that everything is really what you see is what you get. There may be a lot of factors that are pushing people to buy and buy and buy the dollar. It may also be got to do with manipulation of the market and things like that. So this is just to give you an idea. Okay, now if we go on to a couple of other things, you can always check here. We've got, if you type in your rate, how you call that, currency map fxstreet.com onto Google. Okay, you just type currency heat map. Okay, currency heat map on Google, and then you've got one of it would come up as FX Street heat map. So here gives you an idea. Okay, gives you an idea of 20 currencies to choose from, and it gives you an idea if it's really how you call it, red, then you've got a percentage coming down, but this is on the 1 hour chart. Okay, but all this gives you only an idea, but we have to always confirm that onto the chart. Okay, so let's go into the chart now and let's give us a bit of an idea. I would like to start off with GBP slash USD first. Okay, the reason is because we have been following the GBP USD very closely. There are a couple of things I have actually posted on Facebook as well. Okay, if you go onto Facebook, Orbex, a couple of things I have actually shared with you guys since last week. There's you probably have actually seen a cup type pattern for the GBP versus the dollar on the 4-hour chart. I've drawn that pattern, and with that one pattern we had so many patterns in there, okay, that have actually sort of confirmed or sort of given us a bit of more confidence that the market will actually go up to that point and come down, because we've got the bearish W pattern, we had the tree drive, we have so many patterns in just one chart. On the 4-hour itself we could actually see like 4 to 5 patterns that are signaling a downtrend. So as soon as it reached that zone there, it did actually start coming down, and I'll just show you that just now so you'll get an idea of what's going on with the GBP US dollar. Okay, we initially started off with a cup-like pattern here. Okay, you got a cup-like pattern, but inside that pattern we had so many patterns. All right, so then the analysis basically happened something like that. Okay, I'll just take this one off. All right, it was a cup-like pattern initially. All right, we've got the cup going on here, for example. I'll just draw that. That was the initial pattern that I sort of started to monitor from weeks ago. Is there possibility of a cup-like pattern? Okay, so that cup pattern has sort of finished already there, but inside that cup pattern we found loads, I found loads of waves and ABCD pattern and flag and pole, and everything actually happened in within this cup to sort of confirm the position to go up and turn around here. Okay, so at the moment we are looking at I mean that same zone, that zone had been drawn weeks and weeks ago, and it did actually reach that area, and now it turned around almost exactly at that zone. So it's on its way down at the moment. Now what is happening now is that this move downwards usually would go down somewhere in the middle of this move up. Okay, this move up made of 5 waves, 1 2 3 4 5, and it should actually come down now. Okay, and it is actually has sort of confirmed coming down. The only question is whether or not it will come down lower or it'll start to bounce off more. Okay, but the thing about the cup pattern here is that we're looking at possibility of prices, because it is a cup pattern that has the mouth here. So we are expecting anything that goes above the amount would actually give you a lot of opportunities to go up much more. So now it's sort of making a U-turn first, okay, a U-turn up. So we need to wait until it makes a U-turn up, okay. It is not, the trend is not really to look at long-term selling downwards and all that. It doesn't look like it if it is based on a cup and handle pattern. The cup and handle, the cup is made of the whole cup like that, and then the handle is made up of this move, meaning that the price will go down and then it will reverse somewhere. And usually the only thing that I'm looking at the moment is a possibility of it to go lower as well. So if it does break this zone here between 1.4610 and 4601, if it does go lower than this, okay, then it might actually go a bit lower here, perhaps around this area here, to make it halfway of this one, this move here, okay. And then once it does come down, then it'll make that U-turn and go way up. When, if it does actually break above this level here, okay, once it breaks this level here, which is 1.4723, for example, once it does reach, let's say 4 7, okay, oops, 3 0, okay. If it does, of course it takes a bit of a longer time because we're looking at 4-hour chart here, okay, so it might take a little time, okay, compared to a 1 hour or 30 minutes. So if it does reach that area here, then you're looking at a big chance for it to actually go up a lot more. And if it does go above 1.4730, the chances are it may actually go up quite a lot, meaning as much as this distance of this pip. This is almost, I think it's about 300 plus pips. So once it goes above there, then there are more chances for it to actually go up to about 300 plus pips. Okay, so here for GBP USD alone, I'm looking at all these patterns and a lot of patterns confirming the upward trend. But as of now, we are just waiting for confirmation of what the prices are going to do. Are they going to push a little bit lower and then go up, or start to go up from now on? But either way, this cup and handle pattern is signaling a possible upward movement, okay, a lot of upward movement. So for those who can actually wait and want to actually take, you know, big pips in stages, it's probably best to wait until 4730, a bit of a wait. But then for those who are interested in trend in trading, once it's actually going upwards, then that's also fine, okay. But you're looking at a big potential, a big movement worth about 300 over pips upwards, okay. But of course that is not a straight line up. It may be going up and down, a bit volatile perhaps, but then that's the aim, is to go upwards that way. But the other thing I would like to let you guys know on GBP USD is that we are, if we are looking at a potential of prices moving upwards, and then of course it's going to move a bit down, maybe a little down first, to go at least in the middle. I mean, from this distance to that distance, from number 1 to number 5, I mean from this point onwards to number 5, halfway through is around here, let's say, okay. So if at all the bears are pushing the price down, or reach you know, somewhere here, at least 50% of that move here, okay, that's halfway through, and then make a move upwards. So if you see that if it's actually moved downwards and then starting to make that fierce move upwards, then you might also see, might actually notice that the news start changing as well, meaning that the news would actually change to be anti-Brexit, meaning that they won't actually go out of the UK. If they are not going out of the UK, it becomes more and more, the more they won't go out of the EU, then you will find more and more positiveness for the pound. So if you see that move starting to go up and then go above 4730 and more, much more it goes up, that means the news are there as well to back up the possibility of no exit. as opposed to exit, because the exit will give you, the news about exit will give you lots of negativity. The news of no exit, or probably not very positive on the exit, or let's say Cameron keeps saying that there will not be any exit, won't be any exit. The more the big people are talking about no exit, then you're looking at much more possibility of prices rising upwards. Okay, but now we've got a pattern that might give you the possibility of no exit as well. Okay, because this is what's going on. So I'm not saying it's a guarantee. I'm just saying that this is what the patterns are looking, giving us a hint of what might happen. But we just have to follow it by stages. I think I've got some questions here going on. Sorry about that. Hi there, Mr. Palani. How are you doing? You've got a question here. Okay. Yes, correct. You have to take everything into consideration, correct? You have got NFP, you have got the OPEC meeting, you've got many things going on this week, okay? Even though it's not going on the day on Friday, we've got a lot of things like I've mentioned earlier on. We've got a lot of other underlying news that are not mentioned on there, okay? But this is important. Yes, NFP, it is very important, but I would like you guys to not rely on only news concentrated, not concentrating on news or fundamental data releases as what you can actually see on the economic calendar, because to be very honest, the economic calendar strategy of knowing what is going on is not enough, because we've got a lot of other things that are going on. Okay, let me bring you back to what we have seen earlier on. Oops, sorry. Give me a second, okay? Right. We have got the other thing as well, Mr. Palani, is got to do with the releases of non-farm payroll. There's a lot of things, a lot of talk at the moment about the manipulation of data. Okay, whether it is UK data, whether it is US data in terms of unemployment, employment, sales figures, manufacturing figures. Now slowly news or little news and some websites, I mean, you're talking about big websites as well, are giving us hints of how data are actually manipulated. So whether or not it is a smoke screen at the moment of US data, even though how positive they are saying, there's a lot of other things in terms of statistics that doesn't actually match what is going on. Not only statistics, but reality, meaning that a lot of people are saying, oh, there's a lot of jobs in the States and things like that, but then for actual people who are living in the States, and from information that I get directly, and there are other sites that are mentioning it as well, there's a lot of job losses, a lot of job cuts. A lot of big companies, for example, are cutting their jobs by 20 to 30,000 jobs, for example. So it's a lot of conflict at the moment. I'm not saying that we should believe the negative side or believe the positive side. I'm just saying that we've got to be in the middle of things. We cannot actually literally listen or look at a figure on economic data and think that that is what it is, because at the moment we had a lot of news on manipulation of data, but not only manipulation of data. We just had recently, we had Deutsche Bank and other banks manipulating the price of silver and gold. So that also gives us a bit of an idea that, and they did actually admit to that. They also said, yes, we have manipulated it, and that's it. There's nothing we as normal people can do about it. But if that is to the extent how people can control information and control your trades and control prices, then what you see in the economic data or political side of it may not also be what you see, what you get. Okay, so be very careful with these things. So here we're talking about GBP USD, our 4 chart. Okay, there's a couple of people have actually asked me about gold. I'll just go there straight away on gold. Okay, we have, let me just very quickly erase that. Let's look at what's going on with gold at the moment. Okay. Alright, this is what's going on, guys, with gold. Okay, now I mean, in my belief, in my opinion, of course, I'm actually looking at a potential. I have actually posted this gold daily chart on Facebook Orbex. Okay, so if you go into Facebook Orbex or Orbex Malaysia or Orbex Africa or Orbex Indonesia, then you're looking at a possibility of gold doing something like this. At the moment, we have got a pattern that is called the lazy Z or 5-0 pattern. Okay, as you can see, I have actually put this little diagram for your reference. This is how the bullish 5-0 pattern looks like, which means that it usually starts with a 0 to X, and then it goes up from X to A. From A, it'll come down to B, but we are not trading all these. We are only trading the last one from C to D. That's all we're trading, but we're just looking at how the whole pattern has actually formed. Okay, so then we are looking at 0 to X to A to B, right? Then the B to C happen to be the longest move up and then the way down. So we're looking at trading on the downside first from C to D, and then later on we can then trade from D to E upwards. What usually happens is that you see what it says in this diagram here. Once it reaches the D, this is where usually traders aim for the buy, because once it ends at D, there is a potential of a buy push upwards. So what does that mean? On a daily chart especially, we're looking at more potential for the gold to fall first before it goes up. Okay, so a lot of you guys may be asking me, what's happening to gold? Well, gold has got, I mean, from a patterns perspective, it's looking like it has penetrated most of the 3 EMAs. You know, the EMA not penetrated the third one as yet. I think we will check on that one in a bit on the chart, but it has penetrated the 50 EMA, the 100 EMA, and approaching the 200 EMA as well. So you see, if it has actually penetrated and gone through the 50 and the 100, that gives us a lot of signal to the downside. But the downside may be limited to this area here, meaning that from now on, for example, if you are interested in selling the gold, you may be able to put in some sell orders, but then you need to understand that your limit or take profit point should be anywhere between 1175.50 to 1158.76. Okay, because this is the turnaround area. Okay, if I take my Fibonacci and I grab it, I pinpoint it from B, I drag it to C. Okay, then I look for my 50% Fibonacci retracement, then I get that blue area as well. But the other way I got my blue area, one of the lines, I got it by measuring A to B, I drag that to C to D. So that's how I got my two lines. Okay, so these two lines, 1175.50 and 1158.76, they are your take profit area, possible or probable take profit area, but at the same time they are also your PRZ, meaning that your potential reversal zone, meaning that prices actually fall and then start reversing going upwards here. Okay, so this is how that pattern looks like. Okay, it's called the bullish lazy Z or 5-0 pattern. It has two names, this pattern. Okay, usually when I say the Z pattern and things like that, I only draw the Z like this, but then it has got the 0 to X and X to A to confirm this whole thing. Then it becomes a Z. The Z only comes in this area here. Okay, A, B, C, D. That is your Z pattern. But I need to monitor a lot of things before that. I need to monitor 0 to X. Where did A actually reach, and A to B, where did it reach? So I simplified that. Usually in my chart, I only just give you the A to B, C to D, and give you an arrow telling you that it may come down here to that particular point and then come upwards. Okay, so there's a few things to do before we confirm a Z pattern, but I usually do that in advance, and then I give you the simplified version. Okay, so that you can get some trade ideas on there. So this is what's going on with your gold. Okay, now this is how it looks like live at the moment. As you can see, prices have actually fallen from that area there and then coming downwards. Okay, and it has actually started falling from that angle here and keep on falling as well. And now, as you can see, 1209 already, 0.52. Now if 0.52 goes down to 0.40, that means it's under the 50 side, then you're seeing more strength coming downwards. Okay, now the other challenge is that it might even just bounce up a little bit close to the 200 moving average. So we don't actually know, but this is where the trend is at the moment. The trend or current action for gold is on the downside. Why? Because you're looking at a lot of other factors as well. You're looking at the dollar. A manipulation of data, in my opinion, is actually helping the dollar to rise up a lot, and that is also giving a bit of motivation to the people who control the market to convince us or try to convince us that gold is actually not going to rise. Okay, but from a patterns perspective, there are still opportunities for a rise at this point here. Okay, that's why I have still not saying that okay, because it's going down a lot then you are not going to see any opportunities for gold. No, I'm not saying that. I think in my personal opinion, I think gold is actually making a correction. Okay, hence the reason I like trading with pattern, because I can then see the possibility in a form of a picture or a pattern. All right, so so far, I mean, I have labeled it as 0xa, but I also labeled it beside the letters. I labeled the 113% or 161.8% or 50% or whatever, just to give you an idea that these numbers are actually filling in with the criteria of the pattern. That means that pattern is going in very nicely with the Fibonacci ratios as well. Okay, so this is what's going on with gold. Okay, on the daily chart. If we go on to the 4-hour chart, let's just see what's going on the 4-hour chart. Okay, let's just see. Okay, we have got still a lot of room downwards, as you can see. Gold prices under all three lines, but you've got some entanglement going on between the three moving averages. Okay, which also gives you an idea that it's not very clear cut, not very smooth flow for the fall of the gold. There may be some factors, news, there's some battle between buyers and sellers and things like that, or even economic data releases from the US side or other sides that are impacting the prices of gold. Okay, so not impacting the prices of gold, but actually giving it a bit of a rough time in actually going up, because there is a bit of a manipulation going on, in my opinion. All right, so this is what's going on here. If you zoom in, you can actually see that we have got some appreciation of price. Okay, gold may be looking like it's waking up a little bit on the 4-hour chart. If we go on to the 1-hour chart, you could see a bit more movement, but that movement goes up maybe short-lived, maybe temporary. Why? Because we are looking at maybe a bit of a correction. So this is how far it may correct itself. You've got a 50 moving average right there, so maybe close. Maybe if it does go up, it go up a little bit more and then start playing around this area, 1213 area, and then boom, come down again. So the reason why I say that is because you've got the 3 EMAs here, for example. See the 3 EMAs, they are all pointing downwards, and then you have got some movement here of go up and then correct, come down, go up, correct, come down, go up, very close, come down again. So there's a lot of resistance going on. So this may actually happen for this again and then come down. Okay, so anywhere close to that area might come down again. So this is basically what the trend is at the moment. So we have got 1 hour, but let's go on to the very, very, very short term. You will see that yes, indeed, there is some correction there, some entanglement here, but then it created some support here and then it's pushing upwards. But again, you've got candles here. For example, the middle one here is not, it's got a wick here, and then now price is going up. So that's just giving you an idea what's going on, but we don't want to be looking at a 5-minute chart and make your decisions based on the 5-minute chart. We want to look at the overall picture. So that overall picture I've given you based on the daily chart. Okay, and you can choose you want to trade on the 4-hour or the 1 hour. Okay, and if you are not really too much of a long term, you want a bit of a short neutral term, you follow the 1 hour chart. And again, here gives you a bit of a nice trend downwards. You got the angle of the clock as well from this very top to this very bottom, giving you a 5 o'clock type of angle. Okay, so that gives you an idea that this is a downward sort of move. Okay, so when you zoom in, you can see that you can take some short trades around. Okay, try to pull your A here, B here, and then C here, and then trade downwards again. You can always do that by pulling your Fibonacci, pull it from this angle, for example, go here. Okay, that means you're trading as well with the trend. Because the trend on the overall big picture on the daily chart, it is still giving you room to the downside, so that you go on to the shorter term and trade that trend. Okay, so here you got 38.2, and then you pull it AB equals CD, drag that down a bit, so you know that there may be potential for it to come down to this side, and keep taking that in stages. Okay, so you've got stages that you are selling bit by bit by bit. You are not putting everything in one basket, put a lot of money or bet onto one pair, and just because I told you there's a lot of room, a bit more room to come down, so you put in one lot, two lots, five lots, and all that. No, it's probably not a good idea. Trade it in stages, take little pips, and just feel the little pips until you get more confidence, and then you go in. Okay, you need to look at how the candles behave as well. Okay, so that's important. All right, so let me just do that. Give me a second, guys. Sorry about that. We've got Telegram going on. So that is actually for your gold. And let's look at what's going on with the US pairs first. Okay. There were a couple of people talked about USD CAD at the moment. So we have got some interest in CAD, USD CAD. So let's look at what's going on. We can see live market at the moment. We can actually take a look at quite a number of buyers are giving us some hints at the moment. Okay, that they're pushing prices up here, at this level here. I've actually drawn two horizontal lines to give you an idea of a wall or a support resistance zone for the USD CAD 1 hour chart. Okay, you have got two lines here at 1.3059 or so, and another one at 1.3035. Okay, so this one here act as a wall, meaning if you have got more support and moving of big candles penetrating it through, let's say, now you can see live market is showing us that you've got more dominance of an upward movement. Why? We have got more strength pushing up from this area here, going upwards. And when you look at this area here, from where it started to move up, you can actually look left and see what's going on here. Here we had a sort of a resistance. Okay, and then the buyer has challenged it upwards. Now let's look left again. Okay, here for example, at this stage, we had market came down, went up a little bit, and then boom, come down. Okay, so this is the stage where the sellers were in control. Okay, and this is exactly close to where it is now. So now, for example, the buyers have taken over a place where it was dominated by sellers. Look at how strong this zone was at that time. At that time, this zone was well dominated by sellers at that time. Okay, we had lots of sellers, a lot of selling champions who have actually pushed price down from this point coming downwards. But then when prices start going up, going down, going up, and then going down again, then we see that at this point the buyers now is taking control at the same place where the sellers at one point had control. Okay, now if this is a big area, big zone before in the past, and then now it has changed, it has handed over the power, the selling power has been handed over to the buyers. This means that now, yes, we may find that prices will actually go up quite a lot. Why? Because this is where, when there is a change of power, okay, there will be bigger movement and bigger chance to see an upward move. And this is why we look at all this area, and then now we can see that it has penetrated through this wall as well. Okay, this gives me a second reason to believe that, okay, there may be now the buyers are in control. Okay, this is what's important for you guys to look left. Okay, always look left and look at how did it overtaken that. It overtaken what actually? Did it overtake previous powers or not? Look at where market has actually started to fall, from which point. Look, this is where it started to fall. See, all the way down, correct? Look at all this big move, all this big move. Where did it started to buy? This point. Okay, look at this move up. This is the move upwards, correct? Where did it start? Here it started. Where did this one started to fall? Here. Okay, you see, so this one is a second point. This was when the sellers were in control. It started to fall here, but now look, the power has been given for the second time. This was a one time here, number one. This is number two here. Okay, here as well the buyer has taken over, came down, now the buyer taken over again. So yes, there are more on the upside. Okay, so this is what you need to always be sure, how you actually draw support resistance line and understand the power of support resistance, demand and supply as well. Okay, this is very, very important. Now let me just change that now and look at, now we look at a bit of possibility of patterns forming. Okay, let's say that yes, you have got a bit of a buying power, then look at what pattern before that could help you understand what pattern it is. You look back and see the correction and look at, it went up here, it corrected itself here, so you may have an ABCD potential here, let's say. Okay, so AB equals CD, let's say. All right, okay, so this is basically it. Okay, and then you want to know roughly where it would reach by. It may potentially reach here, but then you pull in your Fibonacci from A to B. Okay, this is your B here. Look at C. C on the dot, 61.8%. On the dot is always a very good thing. Okay, so if it is 61.8%, your D, number one, could reach at this area, but you pull your Fibonacci first as well. For your second possibility, you look for 1.618, which is very close to the initial line drawn as well. So you have two possibilities of where D could actually reach for the USD CAD. Okay, so we pull this one down. As you can see, you have got two TP areas, either 13129 area or 13134 area, between these two horizontal line I've just drawn. So you want to know where you can actually enter roughly. What you do is that you've got A, you've got B, you've got C, you've got D. You draw that A, B, C, D, and you just connect your A to your D. Once you connect that, you've got a center axis point. Then you draw another horizontal line at the axis point here. You get 1.3063. So 1.3060 was a good area earlier on that you could have bought already or buy now. For example, you want to enter for a buy, and then you're looking at take profit below 3120 area. Okay, so 3120 area meaning 3110, let's say. Okay, so that will give you about, I think, about 40 pips or so a chance to actually buy. Okay, but there is a bit of a challenge here. Okay, the challenge meaning, yes, I have got an ABCD here, but overall big picture you need to understand, you may actually get a W-like pattern here. Okay, which gives you an idea that if it does go up, this is an area it might come down as well. So don't get too excited and buy and keep on buying and leave it to keep on buying and buying, because it may, this is time of correction, it might correct here. So it's not only something that you need to think about, is not only to aim at the take profit. Okay, you need to understand where are the possible turnaround point. We call it the potential reversal zone, and hence the reason I like trading with patterns, so that I can take a look at the reversal zone in front of me. If not, how are you going to gauge? How are you going to actually guess? You cannot guess in this game. of trading forex. Okay, you need to understand with a lot of rules on where you should be actually placing your TP correctly based on prices and based on potential reversal zones. Very, very important. Okay, so this is live going on now. 1.3072 still going on. We got a strong large candle there. Now this is something that I need to also let you know, I mean remind you as much as I can. I would love to remind you always, look at the behavior of candle. The candle is a longish bullish candle, has actually gone through this support resistance zone. This gives you a very clear, good tip that the bulls are dominating. Okay, and just now we talked about how market fallen here, but then now the bulls are taking over. You need to look at the handover of the power. Okay, the power here was sellers, but then buyers at the same level have taken over. This taken over is usually strong takeover. Okay, that's why you got longer and longer bullish candle happening. This is called price action. You need to understand that. Okay, all right, good. So that's your USD CAD, guys. Okay, a bit of tip there. All right, now let's look a little bit on USD JPY. A lot of movement. Of course, like I've mentioned earlier on, we have a lot of data giving you positivity about the US dollar. Okay, about the US economy, telling you all positive things about the US economy. All right, now the problem with that is that we've got a lot of data that is telling us otherwise, so we need to be on the neutral ground and not just follow whatever we see and what we hear. All right, because we might get a bit of a surprise later on if we don't trade it by stages and just follow everything we see and hear. It's probably not the best thing to do. Okay, so let's look at what's going on. USD JPY easy. Why easy? Because we have looked at the market earlier on and we have seen loads of weakness for the yen, correct, versus most of the other currencies. So here we're looking at a free flow upward move, and we're looking at a very strong candle angle. You know, all these candles, the angle, the clock angle, sorry, really strong, really towards 12 o'clock. As you can see here, if I minimize, you can see how it is actually extending upwards. This part here is picking up. You know, more buyers are giving you more, how do you call that, room to the upside. If you go onto the 4-hour chart, again you can see this is again happening. Look at how much support it's just pushed up so much here, and it's not only pushed up at this angle, but it's pushed up by very significantly longish strong candles. So that gives you an idea that the buyers are definitely ruling. But this does not mean that, oh, the economy is fantastic in the US and everything. No, it's just the play of the market. This is how the market plays around with news being sold by media, and then the media influence investors play around with what's going on with the psychology of smaller traders, and this is how it works. Okay, excuse me. So we have got that. Now it's at 111116 at the moment for the USD JPY. Let's look at a couple of other things. I mean, quite a number of you guys were asking me about oil as well. Let's look at what's happening to oil. Now, 2nd of June, big things are going on. Okay, but one of it is the OPEC. Like I've mentioned, the 2nd of June. Okay, 2nd of June, we've got OPEC going on. All right, so OPEC, all the oil producers, exporters are meeting up. Quite a number of countries, more than 10, I think. We've got big superpowers of oil like Saudi Arabia, Venezuela, Iran. These are the big three. Okay, the biggest one is Venezuela, biggest producers in the whole world, producing and also having the largest reserve of oil is Venezuela. So Venezuela has to be there, okay, on the 2nd of June, okay, and we have got Saudi Arabia second, really big producer and very big reserve as well, and then third we've got Iran. But these three are the one making the big chunk of the oil supply, the oil business, and the business of supply and demand of oil, and making prices up and down, making everybody's life actually up and down with oil. Are these three main countries together with the other countries as well. Okay, so you need to understand what's going on now. We have got some resistance for oil at the 49.89 to 50.19 area. Why resistance here? Because as you can see, we have got candles here. Let's just put this one lower. Let's look at what's going on here. 49 area, let's say the 50 area, okay, because this is what the news are saying. We've got a $50 per barrel area for the oil to go through first. Okay, so this is what's going on, but let us do a bit of an analysis very simply, visually as well. Before that, let me answer some questions that I have. Mr. Palani, you have got a question on USDJPY. Sure, I'll go back on USDJPY right after I finish the oil. Okay, we'll go back to USDJPY, not a problem. So we have got, let's minimize first. Let's look at what's going on. Look at the angle, guys. When you zoom out for oil on the 1 hour chart first, let's go 1 hour chart. Look at this whole angle. That angle itself, maybe not 2 o'clock, 2 o'clock somewhere here, but that's about 1 o'clock. That's higher than 2 o'clock, moving towards 1 o'clock. That means there's a bit of a pickup with oil prices. Okay, and the other thing as well is to look at the behavior of candles. Look at the behavior of candles. Look at how the candles have respected the moving averages. They are actually going upwards here. You see, it's creating a bit of a support. Can you see? It came down, went through, but then came down and then start thinking and start bouncing off the 100 moving average as well, and then start moving past or penetrate through the 50 moving average, and you have got some movement. Now the thing is that let us do a bit of analysis like what we did earlier on. Let's look at where it has actually lost its power on the sell and whether or not it has handed the selling power to the buyers. Okay, let's look at this area. Let's look at this area. Look at this area. Did you see any price fall here? Yes, we have some price falling here, correct? Here, price went up, fell. Went up, fell, correct? Now, went up, passed through it, fell, but then I want you to spot areas where prices have actually fallen or started to fall. Okay, let's do this together. Let's do this together. Look, prices fell from that angle, correct? Prices did fall a little bit here as well, correct? Prices started to fall at this area, correct? Okay, now let's do it again. Give me a second. Oh, okay, and a bit. Yes, I just want to show you that. Okay, so then we have got here as well, right? Prices falling. So we have got prices falling at where prices is at now. Now prices at 49.31, 49.32. Okay, $49.31 or so. So this is where prices is at the moment, roughly 49.31. But close to this area, we have got loads of prices have actually fallen at this area. A lot of resistance. Okay, so will prices stay? You see how many concentration of price, how many power, so many selling power happen at this stage. 1, 2, 3, 4. But if we look back, maybe you can actually find a lot more along the years as well. So what does that mean? That means we need to watch out for this level. We need to watch out for this level really carefully, okay, because this is where prices may fall big time, may fall. Okay, if it doesn't fall and you see that you have got lots of candles, big long candles penetrating through this area, then that means that the buyer have taken over. So let us not trade. At this stage, we are in doubt. We still don't know. If we are in doubt, we stay out. We wait until the price have actually settled. We wait until the event in OPEC has settled a bit, or we have got a longish candle penetrating through it, giving you signal that yes, now the buyer have taken over all these sellers selling power in this area. If it has taken over, then you have got more confidence that it has changed to the upside. Okay, this is how it works. All right, let me just answer some question. Okay, we'll go back to USD JPY. But any questions on oil at the moment, guys? Anything? You guys understand the handing of power? You guys understand that? A lot of people would explain to you and tell you that support becomes resistance, resistance becomes support. This is more or less the same, but I want you to understand it like a story. I want you to look at all this concentrated area. What happened? What is the start of the trend, the start of a fall, the start of a fall, the start of a big fall down? Okay, but then now it may change or it may repeat again. So if you say history repeats itself, that means it may repeat the movement of all these powerful sellers previously. It might happen, it might not happen. But at this stage, we cannot be sure. Why? Because we don't have the confirmation of a longish candle going through it to tell us there's a trend change, or more candles, strongish candle coming down. If it does come down and it penetrates through all these three EMA lines, then yes, the trend continue to the downside. At this stage, you cannot see even the body of the candle. You can see a lot of non-predictability. Okay, unpredictability here. Why? Because the candle has got no bodies, got no long bodies. It's just happening like that. If it does and it gets stuck at this level, that means you've got doubt. Okay, even the market is in doubt. The market is waiting for something. So you are not supposed to just go in and trade at this stage. Not a good idea. All right. Okay. I'm going to be clearing off all these drawings now. All right. Now you could see that something is happening. All right. Now let's go to the higher time frame. Look at what's going on here. All right. You see it's going upwards, but it's giving you a bit of confusion. But based on what I've drawn earlier on, this is how you made your analysis. You look at oil prices where it has fallen. Look at whether there is a candle, okay, coming downwards more or not. If not, then a long candle penetrating through it. Okay. What you can also do is start drawing a support resistant area or zone based on many candles that have sort of concentrated. Here we got many candles, right? Concentrated all this area here. So choose the highest body you can see here, right? Once you choose the highest body, okay, and then choose the highest body's tail here. So that is your zone. Okay, you have one big candle penetrating through, then you got big candle penetrating through. That's good. And you got a lot of resistance, you got resistance and support, resistance close, you got lots of resistance and a lot of other things going on. So that zone may have been drawn correctly. Okay, so this is the area that oil prices has to penetrate through with a long candle up. Then there may be more possibility for the upside. But as you can see, it is challenging that wall. This is your wall. This is all your support resistance zone area that is made up of price 49.34 to 49.43. That is for oil, guys. Okay. Alright, so let us move on at the moment. Let's give it a second. Let's move on now to the USD versus the JPY. Let me just erase all this first. Alright, USD JPY. Let us do that again. Okay, let's do a bit of an analysis there. Here, look at when prices start to slow down. Okay, doesn't matter whether you've got events or whatever, the prices always will have its own behavior of way it will just slow down and give you long wicks and very little body, and that means it's starting to rest, maybe get tired a little bit, or maybe thinking what to do in this area. Once you see candles behaving like this, you look left. Look at what's going on. Look at whether or not there were places where big moves have actually begun to happen at that time. Okay. All right. So yes, here for example, it fell, boom, all the way down here. Okay. So it gives you an idea that this is a very significant support resistant area here. All right, so use all these candles here to create zones. All right, so what you need to do then is look at this one here, support area. You draw two lines here following this candle, okay, to create one kind of zone for you, more like a support zone. But the resistance zone is really strong. Why? Look at this. This is where it fell, boom, all the way down. This is where you can draw your support resistance base here. So this one here is really strong because this is the start of a very big fall. All right, so now you get a picture. You have got two zones here. This is all your wall. This is one very big giant wall here. This whole thing can be your support resistant wall. Okay, so let us make it clearer. Okay. Right. So here what you do is you make it a zone. Okay, you make it a zone like this. This is the zone. Okay, one zone and the second zone. Okay, just to give you an idea. Okay, what's going on. So look at this. From a trader's perspective, I have got two zones, but I am in a very risky zone. Why? Because prices is here. If I want to place a trade now, okay, if I place a buy trade, I'm expecting it to go up, but then I've got this zone to break. So this is my risk. It might go up and turn around here, but if I am selling, then I press my sell button, I expect it to go down, and then it goes down, but here is another zone, and then it might bounce up here. So you are in a very risky zone if you have already placed a trade and you are selling or buying, because you are caught in between. You're caught in between these two zones. This is dangerous. Okay, what you need to understand is that if prices penetrate above with a long big candle and it goes up, then it's safer to understand it will go up more. Okay, that means this became a very strong support. If at all you want to sell and then you find that there's a long candle or a big candle or more candles penetrate through and then it goes down, then you've got more confidence for down. So in other words, it's safer for us to trade above 11188 above, or to buy, or 110.65 to trade below. Okay, so this is it. This is what's going on with price action. Okay, demand and supply sort of thing. So this is what's going on. So what you need to do is clear all that first. Give me a second. Okay, and understand that that's the zone that's risky for you to trade if you are in between. Then you look for patterns as well. Okay, so let's look at longer term. Longer term, on the daily chart, we have got very nice clear 3 moving averages pointing down. Okay, but the problem is we have got the candles penetrating through the 50 EMA, but then we've got the 100 and then 200. So it might actually cause a bit of a friction, a bit of a challenge here, and then price might come down anywhere around here. So this is still candle is in between the two lines. So if you are a conservative trader or you want to lower your risk, it's probably best for you to be really careful when you're trading in between here. But as you can see, trading in between is really risky. Okay, you're not in the right spot, you are not in the right place to trade, but then a most important thing as well, you are not at the right price to trade. Okay, because you are 111.18. 0.18, if you want to sell, you need to go lower than the 20 side number. So 111.10 only, then you can see a potential selling. Even buying, you need to buy only at 111.30 because above 20. So as you can see, you are not only the wrong place here, automatically drawn for you, but the price itself doesn't actually match a good time for entry or a good place to be. Okay, for the USD JPY. If we go on to the 5-minute chart, okay, let's see what's going on. See, for those who are scalping and things like that, they're probably scalping in between here. Okay, you might be lucky to find some pattern actually as well, but then as for me, I mean, to trade in this zone is quite risky, okay, because we are still, you know, we are on a very dangerous, risky territory in between this zone. Okay, so this is for USD JPY. It's clear on the zone part. I mean, for the 1 hour chart, we have got more buying. I mean, it has penetrated through this one, okay, but it is in between this one. So perhaps you've got more room to the upside here, since you're looking at it. But again, you've got is limited to that zone here for now. Okay, so that's basically what's happening to USD JPY. Is that clear, Mr. Palani? I mean, for USD JPY, is that okay for you? If you guys got any other pairs that you want me to look at, we can look at them together. USD CAD, USD JPY, GBP JPY, couple of things, right? What's going on with USD GBP JPY is almost the same thing too. We have got a sort of W-like pattern. It's moving towards C to D, but the nice thing about GBP JPY, I mean, the downside of it is it's one of the riskiest one to trade. The volatility is really high, but then it poses quite a number of patterns now at this moment of time, meaning you've got lots of A, B, C, D. If you can spot it, you see, if you're aiming at upwards, you've got A here, B here, C here, D, and then A here, B here, C, and then D again. So you can take it by stages, but to look at it from a bigger perspective, I've got a W-like pattern, which is a bearish pattern, meaning that yes, it goes ABCD, ABCD going upwards towards D, but then this is the area where it poses as a potential reversal zone. So it might just go up here in within this zone and then come back downwards. Okay, let's see. All right. Okay, so hi there, Veronica. How are you doing? We have got a bit of a request from Veronica for NZD USD. Sure, we'll take a look at NZD USD, guys. Let me see whether I've got it here. Let's see. Okay, NZD USD. Okay, before that, Mr. Palani, you're targeting for strong sell, you say, Mr. Palani, saying for the USD JPY. Yeah, okay. To confirm. Brilliant. Okay, that's good. Very good. Let's see what goes on with that pair. Okay, very good. Okay, so USD NZD, let's just AUD USD, let's just USD NZ, sorry, it's NZD USD if I'm not mistaken, correct? Let's just check that. It's NZD USD you've mentioned, yeah? Yeah, if I've got that one right, Veronica. Right. Okay. Now we're looking at, remember I've actually mentioned to you guys on the commodities going low, you know, CAD, commodity currencies like Canadian dollar, New Zealand dollar and Australian dollar, they're all going on the low side mainly because the commodities are on the low side too. Okay, they are on the low side because we are in a risk on sort of market at the moment concerning the dollar. Okay, you've got people putting in their investment into the dollar because of all the things that's going on, a lot of positivity. So they are increasing their investment on the dollar. So if they're increasing their investment on the dollar, then all other commodity-related pair of commodity currencies, even commodity, will be on the downside. So NZD will be, you know, looking like it may be favoring the downside too because it moves in correlation with the New Zealand dollar. With the Australian dollar too. All right, so here if we look at it from this angle itself, you can see that that is an angle downwards. Okay, it's a lot of resistance and then coming down. Okay, got up, down, up, down, up, down, and it's like a stairs coming downwards. Okay, and then in terms of prices, 6699, very close to the 00 sec number, so we want to wait until it goes lower than 80. Okay, because the next psychological level below that is 80, so 6680 and below. So 6670 onwards, if still persisting to go downwards, then you can find more confidence for it to go even lower. Okay, so indicators, moving average 200, right? Then you have got moving averages again 100. Okay, so 3 moving averages that we apply. Okay, and then the last one is your 50. moving averages. Okay, moving average, sorry. All right, let's look at this. Now, this is again confirming, as you can see, most candles are under all three lines. They are under, you see this one's under three lines, so giving you more signal to the downside. Right now, 4 hour again under. And then look at the angle, it is picking up in the angle on the downside for NZD/USD. Right here on the daily chart, again more confirmation. It is starting to give you more hints to the downside. All right, now here on the based on the daily chart, if I draw that, okay, maybe a possibility of a Z-like pattern, okay, like this here, okay. And here usually if it does come down to, if it is a Z-like pattern, it come down to about 50% Fibonacci. So if I pull this one, let me check whether it's 50% or not. As you can see, not quite, but 50% is around here. All right, so that is an indication that might bounce up through there, but we have got a stronger downtrend dominance. Okay, say sales, the sellers may be in control as well, so we need to look at what goes on in within this zone, right? So if I pull this one here, 1272, it reaches there. It looks like it may come down to this angle because the dominance is sellers. Okay, dominance is the downtrend, so there are a higher possibility of it coming to this angle before it goes up. So usually a Z-like pattern comes down like this and then up it goes here, but it wouldn't go up too high, maybe just about 50% or so, come back to this area and then come down. Okay, because the trend is on the downside. So this is my A here. Okay, B, right, C, and then D around here. That's your A, sorry. Okay, that's your Z pattern. This is your Z pattern. All right, so that's basically it for the NZD USD. All right, let's see. Okay, hi there, Vincent. You've got a question. Vincent says, is there any correlation between the ADP on Wednesday night release and NFP on Friday night news release? That's a very good question, Vincent. ADP stands for automated. Okay, so that means it's computerized, and yes, it has to some extent some correlation. Okay, because everything that is done electronically or computerized, you know, they put all the data in and then it comes in a computerized format as a statistical forecast. It'll come out on Wednesdays, every Wednesday before the NFP. The NFP comes out on a Friday, so Wednesday the ADP comes up, and yes, it will be a good reason to actually look into the ADP. So Vincent, if you look into the ADP and look at what sort of idea it gives you, let's say more positivity or something like that, then what you can then do is look for more evidence and news about the dollar and things like that, and then go onto the chart and look for patterns and see whether or not we can marry them all together. Okay, so yeah, that's a very good question, and the answer to that is yes, there are some correlation to some extent. All right, good. Thank you. Okay, so we've covered a few. We've covered a few pairs, things that you guys want to look at, and you guys, most importantly, is to have a bit of an idea how to look at sellers in power. You know, where the selling power have actually started, where the buying power have actually started before previously, and then look at prices now and see whether or not the current price or the current trend has taken over that previous selling power or buying power. This is called price action. Okay, and this is also has got also to do with support, resistance, supply and demand as well. Okay, so this is very important part. Okay, sorry about that. Now let's look at, I'm just checking on Telegram as well. Okay, good. So let's see what we are looking at now. If you guys have got no more questions, then I will just wrap it up here and see you guys next week. If you've got questions, please feel free. Okay, we want to look at any other pairs or things that you would like to ask with regards to the pairs or instruments that you are in. Okay, here I'm still looking at the GBP dollar on the 4-hour chart because paying a lot of attention for the pound as well, because we've got really big news like the Brexit and so many other factors that are sort of pounding the pound. It's actually impacting the pound quite a lot. So this is where we want to trade in stages, and not look at too big a time frame. The big time frame is for you to have an overall picture and a big patterns perspective. Okay, and then you go on to lower chart, always lower time frame, sorry, and start looking at smaller patterns on lower time frame, but similar trend. Okay, that's the most important thing. Okay guys, so I think that's all I have for you guys at the moment, and shared with you guys a couple of trade ideas for today. Today is Monday, the 30th of May. So for those who are going to be attending the last part of the Geopolitical Trader series, we'll see you guys tomorrow. That will be 6 o'clock my time, so that means 4 p.m. GMT. Okay, so 6 o'clock, 6 p.m. Cyprus time. Okay, tomorrow will be the last, or will be part 4 of the Geopolitical Trader series. All right, so this is for the Geopolitical Trader. For those who already have a live account, you guys can join me every Wednesdays, which is again trade ideas, more like troubleshooting your trades and answering your questions about your existing trade. That happens on Wednesdays, every Wednesdays at 4 p.m. My time. Okay, 4 p.m. my time is GMT, GMT 2 p.m. All right, so that happens on Wednesdays. All right, guys. So that's what I have for you guys today. So I would like to say a big thank you for attending today's webinar, and I will see you tomorrow as well for those who are attending the series. Okay, guys. If not, for the rest of you guys next week. All right. I think I've just got some question. Okay, guys. Thank you so much, and have a good evening and a good day. Bye bye.